Today, folks, I maxed out my tax-free savings account, which if you're an investor in Canada, it is the most important account you'll ever utilize. As I like to say, tax-free income in perpetuity for the rest of your life. It is the truest form of generating passive income without the government down your back. And I'm going to be sharing with you the performance of this account, what I bought in 2023, because the first thing you should do at the beginning of every year is max this account. We're going to be diving down into my RRSP. We're going to be comparing the performance of these two accounts, and then we're going to be talking about some positions like Tesla. We're going to be talking about Taiwan Semiconductors and a few other positions as we broad view the market and some of my predictions on what I think is going to happen in the first half of this year. And if that's a conversation you think you'd appreciate, hit that like button, folks, because let's kick it off by taking a look into the TFSA itself. Like I said, guys, the contribution room for this year is around $6,500. I maxed that literally this morning. I transferred it to USD and I bought Taiwan Semiconductor. In fact, I even sold my SCHD position out of this account, which is a US Dow Jones focused dividend ETF, to basically double down on TSM. I've got about 13,500 invested in this company now, and that's about 18,000 CAD. I'm looking to scale this to be over 5% of my entire portfolio. We still have the VDY position. I haven't touched the S&P 500 position, and I'm going to look to use these dividends to continue to cost average into this account because I'm just looking for return on invested capital. As I told you, I don't want dividends to be the primary factor of my investing decisions from here. I just really want the overall growth of the portfolio to continue and look at dividends as a secondary, bonus, something that I can spend today without giving up the growth of the accounts. From a performance standpoint, going into 2023, this account since inception has done exceptionally well. My TFSA currently since inception is up 137% against the S&P 500 in the same time period. That's only up 60%. So we are over doubling the performance in this account, with the current positions, since I've recently added to them, are actually doing quite well. The dividend income is really cushioning the blow and the downside risk of the S&P 500. That's why I really like my VDY, even though I think that Vanguard Canadian Dividend ETF will likely underperform over the long term compared to something like TSM or VOO, which is why I'm trying to balance it out so everything gets a nice rounded, some global diversification in there. Talking about my RRSP, I'm not going to be able to contribute this until obviously we get through tax season, which won't really be probably till likely March. So I'm not really looking to do much in this account, but the performance of this account has bar none been the best account I've ever invested in. I don't think I can do too wrong in this account. Right now, all of my money in my RSP, about 50,000 US, resides just in the Schwab US Dividend Equity ETF. This account's about 66,000 CAD. That's what it's worth today. And just to point it out as well, my TFSA and CAD value is worth around $160,000. But talking about the performance of this registered retirement savings plan, guys, because I held Tesla in here since the early days, like 2019, I opened this account in September, and literally pretty much the primary stock I bought was Tesla, at which it drove this account up massively by like 250+%, at which all the way up I was taking profit on Tesla. And even at this very moment, hit all-time highs going into the end of the year. It is up 263% since inception in 2019, where the S&P is only up 28%. Now, these are my primary accounts, but I do have another 100,000 invested in my corporation. I have another 50,000 roughly in my managed account. In the managed account, I did purchase more VDY, but let's just take the broad view, because at this point, all the positions do begin to overlap. And we can see VDY sits at about 37%. I bought another couple thousand of that this morning into 2023 as well. VOO currently at about 34% of the entire portfolio. SCHD, because I scaled it down in my TFSA, I just thought it was a better place of return on invested capital in TSM, just because, again, in my TFSA, the US dividends are taxed at 15%. It is the only tax you experience in a TFSA. So I just want to hold SCHD in an RRSP where you don't pay the withholding tax on these US invested dividend stocks. So I thought, again, buying TSM there with along with that contributed capital of 6,500 brought TSM up to about 4.6%. I told you I was trying to get about 20,000 in TSM, this Taiwan Semiconductor stock, but I'm just under that. So I am going to use dividends, and new capital is primarily at the beginning of this year going to be primarily just going into that stock. But keep in mind, I do have my drip set up on VDY. A lot of this is just going to keep cost averaging with SCHD. So I'm not too concerned. It'll be continually buying into this no matter what the market cycle is. And again, that brings my cash value position down to about $27,000. So all combined, mind, my current yield on this portfolio sits at about 2.81%, or about $10,617. But as I said, my primary goal this year is not to be so dividend oriented. I just want to get the best possible return on invested capital. And as mentioned, some real opportunities are starting to open up. Like I said, if you're into real estate, if you're into stocks, this is going to be the year to find these hidden gems and really take advantage of them. And that's what I think TSM is going to be for my portfolio. A lot of you are cracking jokes that I'm just going to sell out of it in a few months. That could very well be a possibility. You might have to subscribe to find that out. But right now, when I compare it to many other stocks and every stock within its industry, I've been going down this deep rabbit hole. It just continually stands out to me. And we'll talk more about that in a second. But if you guys want to support the channel, you enjoy these portfolio overviews, and you want to bring all of your accounts into one place and get a diversification set understanding, go to portfoliospreadsheet.com, use coupon code dividends for 30% off. It would definitely help me out, and I really appreciate everyone supporting. We're going to be launching again another version. You buy one, you get all of them for free, but we do want to get the Excel version up and running. Just bear with me here. It might take me another month or two. We're doing some patches as well. So let's take a moment and dive down into some of these individual stocks. My opinions may come as unpopular in this current market environment, but this is just how I feel. And we're going to kick it off with, first and foremost, Apple stock, which is getting devastated today, down about 4% alone. You might recall about, maybe was it a year ago, somewhere down in these lows, Warren Buffett was continuing to buy a few Apple shares. But nonetheless, guys, there's only one thing you really kind of got to ask yourself here is, how do you think the Christmas holiday went? How was that last quarter? Because as of late, into this recessionary environment, Apple's bottom line EPS has more or less been stagnating, even though they're seeing some revenue growth here. And that's leading the PE multiple to slowly trickle down. It's currently trading around 20, but the mean of Apple's price to earnings multiple has been between 15 and 16. And if we're heading into a recessionary environment, I wouldn't be surprised if we actually return to that median. It's something that I'm very fearful of with a lot of these large cap hyped S&P 500 stocks, which is why I've opted into the S&P 500. If these companies underperform, the S&P 500 will underperform, but I think to a less detrimented level. And I want these companies to sort themselves out until they find a bottom through this recessionary period. And I'm going to get my exposure by cost averaging into the index and let the index passively weight these stocks as it sees fit as they go through their cycles and the market cap weightings readjust. Now, when it comes to Tesla stock specifically, as so many of you asked me about someone that's made a small fortune on Tesla, you know, I got out of it. I currently hold no shares. Where do I think is a good time to buy back in? And this is, I lose subscribers when I talk about this stock. Like I said, it's just my personal opinion. Take it or leave it, as Tesla is now down 13% today alone. I fear that, you know, when I bought Tesla in 2019, I was buying it on the promise of the commercialization of a self-driving taxi network at some point in the near term. Elon has been promising that every year since 2017, and even 2 quarters ago, he was saying that by the end of this year, we'll have it ready. Yet when I watch videos, it's good, it's impressive technology, it's amazing, and I think it's around the corner, but around the corner could be another 5 years from now. Nobody actually knows, and that's a big concern for me, because like Meta stock that so many people ream out is this dying company that's investing too much capital into VR, and VR doesn't make any money. You could arguably say that Tesla is almost in the same boat, because you have to value, even at the current valuation, that's the entire auto business of Tesla being valued even at the current price. That's like 5 years of pricing baked into this company already. So we need the cherry on top of the cake to be robotics, to be AI, to be self-driving, but none of that is commercialized yet, and I don't want to pay for that risk into the future, because it leads to an extreme amount of volatility as people try and predict those future cash flows of this company. Again, you get outsized returns, but you can expect to see outsized losses, and I don't know where this stock bottoms, but for as long as we're heading into this slowdown recessionary environment where Tesla isn't seeing the same demand that it saw 2 years ago, where you had to wait literally years out to get any of these basic models of Tesla's cars, now you can pretty much get them delivered in a couple months. The wait periods have dropped dramatically, and in these recessionary environment, we know that luxury car demand tends to slow down. You know, I think Tesla will graze through this. I think if you're young, you're 20 years old, so you could buy this today and be comfortable knowing that in the next 5 or 10 years, all this extended value will be priced in. If these speculative growth aspects of the business come into fruition, you'll make a fortune. It's a great stock for the right person. Just for me in this moment, I just have to sit back and watch it and see how it performs and what comes into fruition from the news cycles. But outside of that, My real attention is going to be on the Taiwan semiconductor stock. If you don't know anything about the semiconductor industry, it's something I've been highly ignorant to. I wish someone slapped me upside the head a little earlier and led me down the rabbit hole of the true, monopolistic size, scope, IP that this company holds. And it's just outside of a few penny stocks that I bought last year, nothing has gotten me that excited until now. This stock, I think, is going to offer me an incredible, reliable return on invested capital at the price that I'm currently paying for it. So for as long as it's trading down here, I'm going to be reinvesting constantly. And I've been taking a look at companies like ASML. And when I compare it to all these industry companies that work with TSM, I kind of just think that that one's trading for the best value. And it is the largest player. And I just can't get over the scope. I did a full video about it yesterday, talking kind of more in depth. I highly suggest you go check that video out if you're interested in these kind of stocks. But right now, this is going to be the only real position at scale I want to hold in my portfolio. And again, just taking a broad view of the markets today, guys, it is not turning out to be the most exciting start to the year, but what are you going to expect? I think this is exciting times for me because this is the year where we're going to become millionaires. I really think that if you are diligent, you're finding the opportunities of a lifetime that are going to be showing up in real estate, the stock market, you're doing the research, you're doing the due diligence, and you're making the appropriate risk-adjusted investments for yourself, that in the next 3 to 5 years, this stuff is going to pay off massively. But just take a look at the broader markets. The QQQs are down 1%. SPY's down 1%. It's not looking too hot with these individual stocks. It's nice to see Meta's up almost 3%. I think that one's still relatively cheap. I think those are where you're going to find your hidden gems if that's a company that works for you. But outside of that, I got to pass the question off to you guys. I'd love to know what you think about all of this in that comment section below.